much for the introduction, even without the jingle, but as I promised at the end, I can sing, so
Be delighted to hear it.
hopefully you will join my singing as well. So, ladies and gentlemen, distinguished guests, so it's a real honor to speak here with you about the subject of growing relevance and untapped potential, which the emerging markets definitely represent. I hope that as Anna started the panel, that you still have some caffeine in your blood after this nice ristretto you had. So hopefully you will have still some energy to focus on this exciting panel we have ahead of us. So as I was introduced, I represent MOL Group, the key player in energy market. So I'm from oil and gas business, and one would assume that I will speak about the energy trilemma, the sustainability, affordability and supply security of the energy for our region. But I promise I will not speak about the energy, and I'm not going to spoil our day today. Even though I have to mention that we are doing a lot as MOL Group to diversify our crude oil supply. So now we are seeking for a new pillar crude beside of the Russian crude, as you may know from the media. So we also contacted our partners in the most developed countries, Norway and US in the Gulf of America. So we got some deliveries of crude from there. But also we went to our friends in the emerging markets to get the pillar crude or the main crude for our processing in our Land Rock refinery. So we delivered crude from the Middle East, from Oman, from Saudi Arabia, but from Baku and from Azerbaijan and also from Kazakhstan, from Western Africa, or even from Libya, and also from South America, from Guyana. So as Marta Mikleshanska mentioned, we have a common history and we joined our history. And we had a strategic alignment, I believe, in the Central Europe. And as the member of the EU, we have successfully transitioned from a centralized economy and centrally planned economy to dynamic market players. But as it was also asked from the audience that how we are going to address the declining demand in general and the slowing growth in Europe, I believe that we have to look beyond our borders of the European Union and Europe, and there is a huge opportunity in the emerging markets. So why? There is an opportunity there, there is a rapid urbanization there is a growing middle class, there is a demand for technology, for the IT solutions, infrastructure, industrial solutions. So, and I believe that in terms of this, we are able to propose to our partners there a good win-win business there. So I think that the 21st century won't be shaped just in Brussels or Washington or Beijing, but I believe it will be also shaped in Jakarta, in New Delhi, let's say in Baku, in Nairobi or even Sao Paulo. And if we would like to remain competitive, I believe that we have to broaden our strategic horizon. So I think that there is an opportunity in emerging markets, definitely to diversify, building resilience, and last but not least, this is a growth there. Why? Few numbers. So till 2030, the 60% of the total economic growth will come from the emerging markets. The middle class in Asia is projected to reach 3.5 billion till 2030. And from the 6 fast-growing economies worldwide are in sub-Saharan Africa. So I think that these numbers really should make a shift for our centralized or economies centralized to European markets. What we have to offer, what is our strength? So let's go country by country. So Poland, 6th largest economy in European Union, very fair track record, as we learned today, in IT services, digital services, fintech. Czech Republic, I believe it will be mentioned later, high-tech manufacturing, strong engineering talent, definitely, and automotive exports. Hungary, hub for pharmaceuticals, automation, and green solutions. I believe that in the afternoon, Minister Szijjártó will share with us his view and vision to build a crossroad or the bridge between European Union and emerging markets out of Hungary. And Slovakia, not least, but very important, it was mentioned even today, the more cars per capita than any other country in the world. So V4 represents a huge economy, so it's 65 million population. In GDP, we scored about 1 trillion, so it's 1.3 trillion. We have, as it was mentioned, highly educated and tech-savvy workplace, but as it was addressed by Mr. Šefčovič, and then in the panel we heard, we have to take a closer look and review our educational system. What can the emerging markets offer? What is there to offer? So, infrastructure, urban development, roughly 200 billion a year. In IT and digital solution, 300 billion just in Asia. Emerging markets require to be or to meet the targets of the Paris targets of the climate targets. There is a need for $1 trillion a year. So definitely a huge potential for all of our countries. So I think that we should not rely solely on the EU and the EU-centric trade. As I mentioned, the emerging markets represent a sole opportunity to diversify, to build resiliency, and to growth. So in terms of this, we have to be together because there we can be more credible, we are more flexible, and we represent also less baggage than the great powers. So one would argue that what we have more to offer than China or United States. And there are a few things, I just made some notes yesterday. So this is a different dialogue with the emerging markets and the representatives there, political representatives and business representatives. This is not this kind of father to son discussion or parent to children discussion, but this is really friend to friend, partner to partner, eye-on-eye contact there. We do not have a political baggage, definitely. Yeah? So US and China are viewed through geopolitical lens. I think that we can adapt faster, so each of those 4 countries in E4 were in the past mentioned as tigers and dragons and so forth, so I believe we can really be faster than the others. We have a good history for building strong partnerships, and we do not represent a so-called death trap diplomacy. So I do not think that US and China are competitors, but I believe there should be our partners there. So to enhance investment in V4 countries, we need few things. And this is to get a political backup, to get financial backup, we have to have business incentives, and we need diplomacy. So we need more diplomatic engagement. So in terms of the political backup, it would be great to have a strategy for the emerging markets, joint vision and framework. So it's not a threat to us, so I believe we should join our forces and align. We have to support the cooperation of our development agencies, Czech Aid, Hungary Helps, Slovak Aid or Polish Aid. In terms of financial instruments, I believe that the banking sector has something to offer. So we need blended finance facilities, proposals for financial solutions, how to avoid the exchange risk, and others. And it would be great to have a sovereign wealth or investment fund. From the business incentives, definitely, we need grants, mentoring, and risk-sharing tools, mainly for the small and medium enterprises. And it would be great to also have pilot projects there. Political will and narrative shifts. This I mentioned already. Treat emerging markets as strategic partners. Highlight V4 strengths, and there are a lot of there. So let's be honest, I mentioned, or I did not mention the risk precisely, but there is a currency risk, there is a political risk, there is a legal uncertainty. But are they new to our businesses? I do not think so. So I think that the key structure, risk sharing, local partnership, and government backing of private sector could enhance our exposure in emerging markets. There is a saying there that ships are safest in the harbor, but that's not what ships are built for. So I think that emerging markets represent not the opportunity just in the economic sense, but rather strategic. Once we join forces and work together with the vision, pragmatism, and ambition, we can build a new pillar for our international engagement. So let's diversify, let's build resilience, and let's grow together. Thank you very much.
Thank you very much, Gabriel.